How's it going? Welcome everyone to the Hot Corner Insider Live Strategy Session. I'm your host today, as always. I'm the director of research. Welcome everyone to the corner in. Oops, I'm the director of research here at All Star Charts. Steve Straz. I'm here with you every week. We do this every week. Wednesdays at 1 o'clock. We go through a little bit of macro, whatever the latest happenings are in the market, and then we go through any standout insider filings of the past week, and then our favorite setups from our Hot Corner universe. So without further ado, let's get this disclaimer out of the way. Nothing we discuss here today constitutes any solicitation to buy or sell any security. This is solely for informational purposes, not to be construed as investment advice. Guys, I am monitoring the chat. So say hello if you're here. And we'll get through this together. It's going to be another quick one this week. I think we broke the record last week. I was super fast last week. Let's see if we keep that drive alive. Another quick one today. So this is really the situation. Large cap tech says it all. Chart of industrials or the NASDAQ or semiconductors would suffice as well. But the theme that we're trying to illustrate with this chart is the overhead supply. Shown here on the left-hand side of the chart first from the late 2021 or early 2022 highs, depending on the index. And then over here now on the right side of the chart, we had, two tests here over the summer. First, we ran up and the move got faded. Then we slightly reclaimed the old all-time highs before falling back into the former range. And now with the, rebound last week and now into this week with some follow through, it looks like we're heading back there for another test. So what we do know about formations like these is that the more times a level is tested, and now this will be 1, 2, could be 3 coming up, the more times a level is tested, the more likely it is to break. What that means is basically supply and demand are fighting it out at a level, in this case 177-ish in XLK. And until demand is able to overcome supply and overpower it, so we need more demand than supply, prices are going to continue to get capped at this level, right? And every time you go up and test it, the demand is absorbing more and more of the overhead supply that's waiting up at that level. So the more times you try, the more times you knock on the door, the more likely you are to eventually break through. So 177, we don't know how much time it takes for us to finally take that out and for, the path of least resistance to again be clearly to the upside for tech stocks. But one thing I do know is that, if you zoom out long enough, this is now the NASDAQ 100, which we're going to treat as technology here in these relative trends versus the Dow, S&P 500, Russell 2000. If you zoom out far enough, you'll see we're right back to a major level. The all-time highs from the dot-com bubble shown on the left-hand side of the screen here. Over on the right-hand side, you see really some digestion of a major run-up over the past decade and a half, even longer, depending on the index, right? So straight higher into those old highs on a relative basis. And then we've spent about 3 years just going sideways where tech or growth really hasn't outperformed. This is another way to look at it. This time we're using the Russell 3000 in the denominator. In this case, the NASDAQ 100 took out those dot-com bubble highs and has been consolidating above them. Now it looks like we're breaking out again. If we zoom in, this is what the chart looks like. So we had that incredible outperformance since last year from tech and the NASDAQ 100, and then some sideways, right? I think we're resuming higher now. If I punch up a current ratio, QQQ IWV, I mean, we're right there. This thing looks pretty ready to break out. And we don't want to make the bet that, for example, QQQ breaks out on a relative basis versus the Russell 3000, but then not all of these as well. These are all going to resolve in the same way. Another way to look at this relationship is with technology. This is tech versus the S&P 500. It looks really similar to the NASDAQ 100 versus the Russell 3000. Sideways since middle of 2020, right? That's shown here too. Sideways since middle of 2020. But tech now has already broken out versus the S&P 500. Came back, retested these former highs. This looks pretty textbook to me. And today, looking at the chart, it's heading back to those highs. It's up here around 39 now today. So I guess the point I'm trying to make here is tech has been the leaders, tech and growth. They're the secular leaders, these groups. They were the leaders last cycle. They were the leaders earlier this year. They've taken a couple weeks off here. Interest rates ran back to their old highs. But now, even over the last 2 weeks, tech is outperforming once again. I really think that if and when the overhead supply in these indexes, whether it's NASDAQ, S&P 500, tech, home builders, semiconductors, when these levels are taken out, I would imagine it corresponds with clean breakouts in the relative trends for things like NASDAQ 100 and tech. And I would imagine tech continues to carry that leadership throne into the back or through the back half of the year. I still think tech will be the place to be. Again, let's see these charts, all resolve higher on a relative basis. And let's see the indexes resolve higher. That's when we'll have the all clear. I think that's where we're headed. So I just thought that was an important reminder to talk about those relative trends. And let's remember where the, two most important intermarket charts are. We have the dollar at a key level here, 103.50, right? Ran up. It's in this downward sloping channel here, kind of trading around in all year. Ran up, tested those pivot highs, rolling back over. And when we zoom out on the chart, these are the highs from the prior cycles, right? So 103.50 is such a big level. If the dollar is actually going to roll over here, and I know it's had 6 straight up weeks, and we've been talking about how strong it is, right? So let's see. We have no idea, but the last 3 days, it's been very weak. It's been very weak all week. Also, at the same time, another intermarket headwind that was resurfacing was higher interest rates or rising interest rates. We had the 10-year run up, make new highs, and now it's failing. Never got overbought, never got that confirmation. If the 10 years rolling over and the dollar's rolling over, if charts like tech on a relative basis, probably making new all-time highs, and tech itself on an absolute basis, probably taking out this 177 level. Right? So you see something like this US 10-year yield, we failed to break out, hooked lower. At the same time, stocks like Apple made these little, whipsaw moves lower and are shaking higher, back above former highs, right? Rates failing, moving lower. Apple bull hooking and moving higher. So 183, this is an old one from our list, but, we dug it up out of the archives today because I think, again, just like I was just, spieling about for the last 10 minutes, if it's going to go back to tech, if it's going to go back to big cap tech, these are the stocks. I would be remiss not to talk about Apple at these former highs. We have such a, key level of interest here that we could define our risk against. 183 is that level. Josh Gottheimer filed one of the political filings for this. He's a House of Representative member, 15,000 to 50,000. And like I said, that was all the way back last year. But Apple above 183, target 220. Stick with big tech right now. NVIDIA, another political filing from last year. Digging these out of the out of our long list of hot corner stocks. First target hit. It's been consolidating, chopping around this level. Now, I've been saying look at it on the line chart to remove some of that intraday volatility. Had an ugly stick following earnings, but it's hung in there, breaking back out to new all-time highs. I think NVIDIA 476 is a clear level at those pivot highs. This is really just a bullish continuation pattern at its first Fibonacci extension. So for above 476, like NVIDIA long, I don't think this trend ends anytime soon. It is going to be a wild ride higher, though. Target just above 700 for NVIDIA. More big tech, big cap growth. Google, this is the largest communication stock. 125. I believe that was our first target. We've been in this name. We had a nice little continuation pattern at 125, broke higher, a nice little continuation pattern here. I think we could define our risk again at 134 if we're not already in it. Not a tremendous amount of upside from here, though, right? Probably better off buying weakness back towards 125. But the point is, next level is those all-time highs of just north of 150. So Google's another one that's been working. Adobe. Adobe, big level here. This is the 62% retracement. I think this, reversal is pretty much already in. We're back above those August highs. They're showing back here. So 537 is, I think, the next level that we could use as, a logical place to define our risk, and get long. We have a nice little coil here, another short-term continuation pattern. That's what these tech stocks look like right now, right? Reversal pattern, the base is completed, big leg up, these high and tight coils, followed by more legs higher. So 537 is that level right now in Adobe. We had the CFO and vice president Form 4 filers from last fall. All right, some new setups. Boy, we are flying through again. Ryan Specialty Group. This is ticker symbol RYAN. CEO, Form 4 filer from March of this year. This is a really nice base, and this one's going for sure. I just pulled up the chart here. Double check what this company does. 12.5 billion market cap. Ryan is finance, insurance brokers, and services. Boy, oh yeah, we know this one. The founder or the executive running this company was formerly of one of the big insurers. I forget which one. But that was him as the buyer. I forget his name now. $7.8 million purchase. Gotta like this above those the shelf of old highs of about 46.50. So 46.50, target of 55. This is a strong group. I was looking through, the best looking stocks, and what I mean by that is the first stocks back to new all-time highs on yesterday's strength. A lot of insurance names in there. Insurance is represented as well as any group on the new highs list these days. Array Technologies is our next setup. Super clean base. Market keeps reminding us that this level here at 24 and change, 24.35 is so important. Since last year now, the bulls keep running prices back into this level, and then you see the sellers step in, and it keeps acting as resistance. So if and when we finally get that breakout, ARRY, let's see what it's doing today. About 24.83. Yeah, it looks like you're getting it right now. This one is just about triggering. But I really like this little range breakout that we have here. Array is an electronic technology, semiconductor name, 3.8 billion. So like this one a lot. If we're above 24.35, call it target of 36. Brown and Brown, that's ticker symbol BRO. This one's clean too. I believe this is insurance as well. Just double check that. Yep. Insurance brokers, 0.6% yield. This one's clean, and it's going today. You're getting that follow through today. Clean breakout. It's trading around 74 and change right now. We have the level drawn here at 73.92. You want to buy this against 74 at the new highs, and then put in a reasonable stop loss, a couple points below that. So above 74, and the insider activity in this one was just from June. Form 4 filer. Target 87 on the Brown and Brown. And how can I be done today without mentioning Bitcoin? I mentioned how stocks really snapped back following through this week. Risk appetite indicators have also looked good, right? We have things like staples and utilities, low volatility stocks making new lows relative to the broader market, while things like tech and growth, like I mentioned at the top of the call, are outperforming, as investors embrace offensive groups of stocks. Another risk appetite development that we had just yesterday was Bitcoin having its best day since March. It's shown right here in the lower pane. We came right back down to this 25 level, which we've been talking about for so long now. This is really where the reversal pattern, broke out from earlier this year. And now we've been back here twice, checked in earlier in the summer, looked like we were taking off, failed, right, from that little tight little, flag that we were watching for so long, failed right back into support at 25,000. Then it started coiling, got a little week or two of a coil. Now it's reversing higher again. I still think this 25 to 30 range, there's a lot of price memory here. And I think as long as we're above 25, this base is really still, shaping up and forming. But it's not until 30 that we get that confirmation. So we want to take out the pivot highs, take out that 30 level, stay above there. If and when we do, I think, it's hard to speak for the broader crypto space, but I think the reversal is on, at least for Bitcoin, right? So then that begs the question, what is the best vehicle? Doing a special report about this. We're going to put out, I think tonight, we're going to pick some of our favorite setups to use as vehicles to profit from the potential coming bull market in Bitcoin. Coinbase is one of them. Super clean. We talked about Coinbase. Earlier in the year, late last year, we liked it a lot. We got in back in the 40s earlier this year, ran it right back to this 85 level, right where we are today. Got out. They started fighting with the SEC. I kind of soured on the name a little bit. I probably came on here and said something like, I don't really want to be in the stock that's fighting with the SEC. So I don't own an irresponsible amount of Coinbase like I used to. It's just the same size as all my other holdings. Had some. I've been holding, a much smaller position since getting out of a larger position earlier this year. And I really still think, here it's so clean. The reversal is in above 85. I think we get confirmation at the pivot highs, which are, you want to jump it and use 85 as the reversal level. You do want to look to the summer highs, though, around 115, 114 for confirmation. But I really do think that entering at 85 is the move here, right? We have the shelf of highs from earlier this year, late last year. So I still like Coinbase. I think it's a great vehicle, and it gives you a little bit more leverage or juice than the Bitcoin trade itself, right? So like, for example, the other day, Bitcoin was up like 5%. Coinbase is up more like 10%. And MicroStrategy is also a levered bet. Oh, this is Riot, not MicroStrategy. Here's MicroStrategy. MicroStrategy, I think that level is really 350 in MSTR. This base is really clean, right? If we were to draw the breakout level and coin all the way back up at these pivot highs, it would show that this base isn't completed yet. Something like MicroStrategy, already above the August highs, already above the year-to-date highs, just came right back in, checked in with those levels like as support. So really, if we're above 350, long MicroStrategy, and our first target is just north of 500. 350 to 500, MicroStrategy is super tradable. Again, Coinbase from 85 to about 160. And then Riot's really clean too. In Riot, if we're above 1050, I think you could be long, play it back towards those highs from this summer. I mean, Riot fell almost 50% from its highs just back in July, right? So that's the level. If this move is the real deal, we're headed back at least to there. Right, so there's three good options to play any more strength in Bitcoin. But again, between 25 and 30, I think continues to be messy. It's when we get that confirmation at 30 that I think we really want to get aggressive in this space. I told you guys I would monitor the chat. I don't think I did a great job. Here I am. CPRT. This is not Chart Request Live. NPMe, you'll have to go to Chart Request Live show if you want to call out tickers. That's what we do there. This is my show where I pick the tickers. Can you touch upon Disney? Yeah, it was in the hot corner yesterday. That's fair. Let's touch upon Disney. I'm going to throw a chart up real quick for you guys. Let's get that Disney chart. Huh? Okay. This is what I see when I see a Disney chart these days. You got that up there, Gene? I stare at the chart at Disney every day because I do go through the Dow components at least once every morning. And then I also sit down and watch TV almost every night, and I turn on my television. I have my streaming apps. This is really the Disney Plus icon or logo. This is what it looks like on your TV, right? So I said, this is too good. These are the same thing, right? Maybe it was like self-fulfilling prophecy here where Disney just printed a top that looks exactly like its streaming logo. But this is the problem. I was talking to the guys on the analyst call just a few hours ago, and I said, could we sell puts in Disney here? And I hate that I'm even saying that, right? I have this tendency to think fundamentally when I know I'm better off just thinking technically. Technically speaking, when I look at a chart of Disney, right, I would draw a horizontal line right here at the pivot lows in the low 80s. And if that breaks, right, you had a rectangle drawn right here at these lows, COVID lows, the current lows, come right in around 84, 85. If that breaks, this is a massive top. And the potential technical implications of this top completing are Disney back in the 20s, 30s, 40s, right? They say the bigger the top, the bigger the drop. This is a massive top. This is a $200 billion wide market cap type of top, right? So I'm thinking to myself, if this top actually completes, and we're talking about, one of America's greatest brands looking a lot different than the way it probably looks today. And we're talking about a company would really be in trouble. is what that pattern resolving lower would tell you. And I thought to myself, it's a bull market. Stocks are working. Bearish patterns are failing, right? And reversing higher. Tops are failing, not really completing and resolving lower for the most part. I said, do we really want to bet on Disney completing like this massive bearish top? And I don't think so. But at the same time, Sean was quick to, chime in and be like, Straza, that's a terrible looking, ugly chart. How, like, that doesn't sound like you. But I was just thinking to myself, I can't imagine a world where Disney's down another 60, 70%. That would be strange. This is huge mega cap company. It's been a strong stock for a long time, but it's really struggled over the past, really decade now, particularly on a relative basis. We got to hold these lows in the mid 80s. I'm not selling puts. Thought about it. Thought, hey, what's the worst that could happen? I have to buy Disney stock. But the guys talked me out of it, at least for today. But those are my thoughts on Disney. So Cramer just bought some Disney. Thoughts on Cramer? Listen, I'm pretty bullish, Jim Cramer. Everybody gives this guy a hard time. I was reminding some of our friends on Spaces yesterday. Cramer nailed this Nvidia trade as well as anybody. I think he named his dog Nvidia. He's been a very vocal Nvidia bull for a long time. So look, there's worse people that could be on TV all day, every day. He's an entertainer, and he entertains me every now and then. I'll watch his show some nights. Depends on who he has on, but if he's interviewing the CEO, sure. Straza going to yeah. All right. That's good. Everybody, thanks for joining. Shout out Jerry Carey, always on the morning show. Speaking of the morning show, we're there every morning, 8:30 to 10 right here on Stock Market TV. So be sure to tune in. And for the Hot Corner Live strategy session, that is it. Until next week, if you have any questions, comments, concerns, just want to say hi, shoot us a note, info@allstarcharts, and meet me right back here next week, same time, same place. See you later.